Hello everyone, this is C. Reshma here. Today I am going to take C Foundation Accountancy Bank Reconciliation Statement chapter. So I'm very excited to do this. So come on, let's go and proceed with it. Okay, so we are going to take Bank Reconciliation Statement chapter. Okay, so before proceeding to Bank Reconciliation Statement chapter, let us have an understanding of a certain terms like what is bank passbook and what is cash book. Okay, so by passbook and cash book, what do we mean? Cash book is whatever transactions we have in a bank, we maintain a separate book, which is in cash book bank column. What bank does is all the transaction it maintains for separate accounts, separate book, passbook. For all the customers, separate books called passbook. So whatever transactions is in our book will be there in the passbook, same transactions. So you will be thinking the balance should match, right? So I have issued, I have given money. The same will be shown as a in the passbook. Whatever the transactions there in the cash book, but the balance generally do not match. Why is it so? This we will learn in this chapter. Now, debit side of the cash book means receipt. Credit side of the cash book means payment. The same way, debit side of the passbook means payment. Credit side of the passbook means receipt. Because for bank it will be payment and receipt. So they are maintaining in that way. Now, why do balance not match? So before that, we'll know a little bit about bank. What banks do? Banks generally what they do, they accepts deposits and lend loans, that we know. Apart from that, what do banks do? What do they do? They do other services. They do many other services, discounts, bills, on standing instructions, makes payment of electricity bill, insurance premium, and many more such things. It collects dividends on behalf of the customers, provides overdrafts, deducts bank charges, collects interest, so many things. Okay, so keeping this in mind, what all the roles performed by the bank, let's move to why there is a difference between passbook and a cash book. Now, same, we know passbook. Bank maintains passbook for our transactions in his accounts. For receipts, passbook will be a credit. For payments, it is a debit. For our receipt is a debit. Payments are a credit. But the balance should match, right? We will see why the balance don't match. First, timing difference. Check issued but not presented for payment. Whenever I issue a check, what I'll do, I'll quickly go to my cash book. I issued a check, credit side, payment. Correct? I issued a check. I made a payment. Correct? I made a payment to the supplier. I'll go to the my cash book bank column, credit side, and I'll put into my accounts. Now, when will the bank know about it? When it is presented for payment by the supplier. The other person go to the bank and presents the check for payment. Then only they'll that bank will present for to my bank account. My bank account, the amount will be deducted. Then only my bank will, what it will do, deduct the amount from my passbook. So it will generally take time, 2 to 3 days, for example. So only after 2 to 3 days, the amount gets deducted in my passbook, but I deduct the same day in my cash book when I have issued the check. So this is called timing difference, and because of this difference, the balance in the passbook and balance in the cash book do not match. Same way, check deposited but not cleared. So when I'm depositing a check, suppose I have received a check, I am depositing it. So what I'll do, I'll quickly go to my cash book and write receipt side, debit side. Okay. But what my bank will do, unless and until the amount has not come into my account, it will not record. So it will present for payment when it is cleared, the check is cleared and account comes to my, the amount comes to my account, it will show as a amount collected in my passbook, that is credit in my passbook. So this is the timing difference due to which there is a difference in the both passbook and cash book. Now what are the other differences? Transactions. What are the transactions? Bank will directly collect dividends, interest. We will not know, only when we will know, when we take a print of the passbook and check. Correct. So when we'll know that time only and we'll record that time only. So due to certain transactions, there can be difference in the cash book and the passbook. Due to errors, there can be possibility of error in cash book, but minimal possibility in the passbook. So due to errors, there can be differences. Now, what is bank reconciliation statement? Reconciling those differences in passbook and cash book is called bank reconciliation statement. Okay. What bank reconciliation statement do? It bring out errors, then it provide undue clearance of checks. It not provides, it brings out undue clearance of check. If there is checks which it's long time it's not clear, then we can make a note of it. It discourages embezzlement. It discourages what? Embezzlement. See, if we have a constant check, if we do bank reconciliation statement, so it discourages embezzlement by the staff. Now, procedure for BRS. What is the procedure for BRS? See, when we do reconciliation, what we have to do, we have to find out differences of cash book and passbook. So we have to start with some balance. For example, I am taking balance of cash book. What I'll do, balance of cash book, I'll add certain items and I'll subtract certain items from the cash book and I'll get the balance as per passbook. This is what is reconciliation. So there are 4 ways to start the sum: debit balance as per cash book, or credit balance as per cash book, debit balance as per passbook, or credit balance as per passbook. What is credit balance as per cash book? If there is a overdraft. And what is debit balance as per passbook? Same, overdraft balance. So now when we start debit balance as per cash book, and if we get debit balance, we will get credit balance as per passbook if it is a positive figure. We have to add certain items, subtract certain items, we'll get credit balance as per passbook. Credit balance as passbook if it is a positive. What if we get answer is negative? Then it is debit balance as per passbook. Okay. Suppose if we have started with favorable balance as per cash book. So this is my cash book, this is my passbook, correct? This is my cash book and this is my passbook. I'm starting with cash book. I have to end with the passbook. I'm starting with cash book and I'm ending with passbook. So what I'll do is, suppose first transaction we'll see check deposited but not cleared. Check deposited but not cleared. Check deposited, cleared, panle. It's not cleared. So my cash book will go up. As soon as I'll write deposited, my cash book will go up. Passbook, it is not affected. So I have to start with the cash book, end with the passbook. So I have to increase and decrease my cash book to come to passbook. So check deposited but not cleared. So I have to decrease my cash book to match my passbook. So subtract. Got it? Check issued but not presented to the bank. I've issued the check, my cash book gone down but not presented to the bank. So bank remains the same. I have to adjust my cash book to bring to passbook. So I have to add it back. Check directly deposited in bank by a customer. Check directly deposited in bank by a customer. So my passbook goes up. I have to adjust my cash book to bring to my passbook. So add it back. Income received by bank. So my passbook goes up. I have to adjust my cash book to bring to my passbook. Add it back. Expenses paid by the bank. My passbook goes down. I have to decrease my cash book as well. So subtract. Bank charges levied by the bank. Passbook has gone out. Cash book also subtract. Locker rent, passbook gone down, cash book also subtract. Wrong debit in the cash book means wrong receipt in the cash book. So the receipt goes up. Now I have to bring my cash book to my passbook, subtract. Wrong credit in the cash book. Wrong credit in the cash book. My cash book is down. Payment. Wrong credit. So my passbook is here. So I have to add it back. Wrong debit in the passbook. Wrong debit in the passbook means wrong payment in the passbook. So wrong payment in the passbook. So my cash book is here. I have to match my cash book to my passbook, subtract. Wrong credit in the passbook. So I have to adjust my cash book to match my passbook. So I add it back. Under casting of debit side of bank account in the cash book. Under casting of receipt side of bank account, my receipt side is less. My receipt side is what? Less. I should have received more, but I have received less. So received less. Okay. My passbook is more. Receipt I'm showing less in the cash book, but my passbook is correct. So I have to add it back. Overcasting of debit side of bank account in the cash book. My receipt is more. So now I have to adjust my cash book to match my passbook. So I have to subtract it. Under casting of credit side of bank account in the cash book. My credit side, which is my payment side, is undercasted. Means payment I'm showing less. It is like receipt. Payment I'm 100 rupees, but I'm showing only 80 rupees. 20 rupees benefit, for example. So it is like receipt. My cash book is more. My passbook, I have to adjust my cash book to my passbook, so subtract it. Overcasting of credit side of bank account in the cash book. My payment I am showing more. So overcasting of credit side of bank account in the cash book. Credit side is payment I am showing more. So I am showing more of the payment. More payment. So I have to add it back. Bills receivable collected directly by bank. By bank it is directly collected. So cash book I have to adjust, add it back. Interest on bank overdraft charged. My passbook has gone down. So subtract my cash book as well. So if I am getting a positive balance, it is credit balance as per passbook. If I am getting a negative balance, it is a overdraft balance as per passbook. So this is the way you have to do the sum. Similarly, how we have adjusted cash book, when we start with the passbook, we have to adjust the passbook. Okay, we'll do 3 to 4 and understand. If we have started with favorable balance as per passbook, okay, so check deposited but not cleared. So I've deposited the check. So cash book has gone up, passbook remains the same. Passbook I have to adjust, add it. Check issued but not presented for payment, cash book gone down, passbook also subtract. Check directly deposited in bank by a customer. Check deposited in bank by a customer, passbook has gone up, so subtract it. Income from directly received by the bank. Income directly received by the bank, subtract it. Expenses by the bank, add it. Bank charges levied by the bank, add it. Locker rent levied by the bank, add it. Wrong debit in the cash book. Wrong receipt in the cash book, add it. Wrong credit in the cash book, subtract it. Wrong debit in the passbook. Wrong debit in the passbook means wrong payment in the passbook. So add it. Wrong, we are doing the third column. Wrong credit in the passbook. Wrong credit in the passbook means wrong receipt in the passbook. So you have to subtract it. Undercasting of debit side of the bank account in the cash book. So receipt side is undercasted. So receipt side is undercasted means receipt is less. So I have to subtract it. Overcasting of debit side of bank account in the cash book. Receipt is more. Receipt is more, so I have to add it. Passbook also I have to add it. Undercasting of credit side of the bank account of the cash book. Credit side, payment side is undercasted. It is like a receipt. So I have to add it back. Overcasting of credit side of bank account in the cash book. Credit side is overcasted. So passbook also I have to subtract it. Bills receivable correctly directly by the bank. Passbook has gone up. So what I have to do is I have to subtract it. Interest on bank overdraft charged. Interest is charged. So passbook I have to add it. So when we do favorable balance as per passbook, we will get favorable balance as per cash book, which is debit balance as per cash book. If we get a negative balance, then it is the overdraft balance as per cash book, that is credit balance as per cash book. Now, when we start with the overdraft, what we have to do is we have to adjust, but we have to do the sign opposite. Now, example, I am starting with unfavorable balance as per cash book. I've started with unfavorable balance as per cash book, and this is passbook. Check deposited but not cleared. So check deposited in the cash book, not cleared. So I have to adjust my cash book to bring to passbook. I have to subtract it, right? But I have to do it ulta. I have to do it opposite. So I have to add it back. So this is the way you're supposed to do. So this is the way you're supposed to do. You have to do it opposite way. Suppose cash you have to add or subtract. Now you should do it opposite. Same way for passbook. If you're starting with passbook, you have to find out what you have to add or subtract. You have to do the opposite if you are starting with unfavorable balance. This is the crux of the entire chapter. You have to remember this. You can do all the sums, most of the sums. So this is the conceptual part of the bank reconciliation statement. I hope I also make a new video where I can provide you with lot of sums in bank reconciliation statement. Thank you so much for joining in. Thank you so much.